Assalamualaikum and hi. My group would like to present about the Healthsouth accounting scandal. This presentation will be presented by me, Alicia, and Lukman.
Healthsouth Corporation. Healthsouth Corporation is based in Birmingham, Alabama. Healthsouth is the United States' largest owner and operator of inpatient rehabilitative hospitals. The company was incorporated on February 22, 1984 by its founder Richard M. Scrushy. Throughout the mid-1990s, Healthsouth expanded rapidly through mergers and acquisitions. In 1995, the company changed its name to Healthsouth Corporation to better reflect its diversified interest in healthcare.
At the company's height in 2003, it recorded nearly 4.5 billion in revenue, dominated the rehabilitation, surgery and diagnostic services market, and employed more than 60,000 people at 2,000 facilities in every state of the US, along with its facilities in the United Kingdom, Canada, Australia, Puerto Rico, and Saudi Arabia. The company was the largest publicly listed healthcare company in the US based on the number of locations and the third based on revenue. So, where did it all go wrong? Corporate accounting fraud. Activities undertaken by an individual or company that are done in a dishonest or illegal manner and are designed to give an advantage to the perpetrating individual or company. Many companies seek to falsify financial statements to make the company appear more successful than it actually is. Corporate fraud in the US has affected market values, destroyed private 401,000 plans, and devalued public pension funds. Tyco, Dynegy, Wilcom, and others joined Enron's fraudulent accounting ranks in 2002. Healthsouth became a member of that disreputable group a year later. Many companies seek to falsify financial statements to make the company appear more successful than it actually is. So, what happened to Healthsouth? The founder, chairman, and CEO, Richard M. Scrushy, was accused of directing company employees to falsely report grossly exaggerated company earnings in order to meet stockholder expectations. The story of how the books were cooked involves several people and simple methodology.
Next is how did they do it and how did they commit the fraud. First of all, instead of expensing startup costs, they will capitalize them and they will manipulate ledger to scheme auditors and keep sole assets on the balance sheets. They also made multiple entries to inflate its perceived earnings and push its share to ridiculous height. Lastly, they methodically added the extra non-existent money in multiple small amounts. As an example, management knew that the auditors automatically look at any transaction over $5,000. Therefore, employees would only move small amounts of money at a time between $500 and $4,999. Income was overstated by almost $5 billion. If the average journal entry was $2,500, it would have required around 2 million journal entries and all the documentation to support the fabricated entries. How was the fraud concealed and how they hide the fraud? First, there were no direct entries to revenue. Second, the paper trail was limited. Third, there were several intermediate journal entries making it more difficult to trace. Fourth, entries spread over various facilities. Fifth, avoided exceeding a certain dollar amount threshold for addition to fixed asset at any particular facility. And last, created false documents to support fictitious accounting entries. Detection of the fraud, or how the fraud was detected. In late 2002, Richard Scrushy sold $100 million in stock right before he announced that profit were expected to fall. He claimed deceptively that this was due to a change in Medicare funding. Scrushy was attacked class action by shareholders followed and the SEC started investigating insider trading. In February 2003, the SEC ordered documents which Healthsouth was forced to give them. In the middle of March 2003, the FBI and the SEC raided Healthsouth headquarters. The next day, civil actions were commenced against Scratchy and Healthsouth. The company was delisted from the stock exchange. The extent of the fraud and role of accounting personnel. A forensic audit conducted by PwC concluded that Healthsouth's earnings were overstated by anywhere from $3.8 billion to $4.6 billion. The scandal's postmortem report found additional fraud of $500 million and identified at least $800 million of improper accounting for reserve, executive, bonus, and related party transactions. The damage or the effect of the fraud is, on March 19, 2003, the SEC charged Healthsouth and its CEO, Richard Scratchy, with accounting fraud. 15 Healthsouth accounting and finance executives pled guilty by the end of 2003, and Scratchy remained under indictment in mid-2004 on 85 criminal charges. Healthsouth was the first company to violate Sarbanes-Oxley.
Richard Scratchy denied any knowledge of the fraud. He and his defense team went to great lengths to put together an extremely manipulative strategy to portray him as an innocent bystander. As for the Aaron Beam, he received 3 months in prison, $285,000 in criminal fines and forfeitures, and legal fees in excess of $750,000. There was a degree of leniency in exchange for his testimony against Scratchy. As for the Weston Smith, he received 27 months in federal prison with 2 years of probation, and he ordered to forfeit $1.5 million in ill-gotten gains. And the last one is the Ernst & Young. Ernst & Young was fined, sued, and required to pay $109 million by the stockholders. The suit contends that they were aware of fraud at the company even as they signed its financial statements. They are also agreed to the settlement without admitting to or denying the allegations. As for the conclusion, government regulations enacted as a result of Healthsouth scandal, which are Public Company Accounting Reform and Investor Protection Act and Corporate and Auditing Accountability and Responsibility Act. And what I learned is the audit function is important. The collusion among several members of management makes the commission of crimes almost impossible to stop and difficult to catch. The small concession lead to greater compromise and, unchecked, will lead to serious ethical lapses and even crime. The culture of the company is simply the sum total of its leadership and employees.